All right, let's get right into it. What we're looking at with Centum Electronics is a company at a really big crossroads, what you'd call a major strategic inflection point. The whole story here is about a very deliberate pivot. They're moving away from their older, underperforming international businesses to focus everything on a much higher margin, faster-growing core, domestic defense and aerospace.
So, to really get this pivot, you first have to understand what they're leaving behind. Management is going through what you could call a cleansing phase, cutting ties with those overseas units that have been dragging down the numbers. It's all about unleashing the real potential of their core Indian business.
Now, this slide tells a fascinating tale of two companies. On one hand, you see that big headline number, a consolidated loss of 61.75 crore rupees. But hold on, that's not from operations failing. That's a one-time accounting charge, a non-cash hit from selling off their French and Canadian units. But if you peel that away and just look at the core Indian business, the picture is totally different. We're talking robust 27% revenue growth and really healthy 12.1% EBITDA margins. It just goes to show how strong that domestic core really is.
And here's the crucial point. This isn't just about cleaning up the finances. It's a fundamental change in how they do business. This pivot aligns perfectly with India's Atmanirbhar, or self-reliant initiative. It's about Centum climbing up the value chain, from just being a parts supplier to becoming a full-on platform integrator.
So what does the shift actually look like? Well, in the past, Centum was mostly a build-to-print company. A client would give them a design, and they'd build it. Simple. Now, they're moving into what they call an elite build-to-spec model. This is a whole different ballgame. They're now designing and integrating entire systems. A perfect example? They're the lead bidder for a massive 700 crore rupee complete radar system. They're not just making a component, they're delivering the whole shebang.
And the scale we're talking about here is just massive. The order visibility is now over 2,000 crore rupees. And to handle these huge contracts, they're not messing around. They're building serious infrastructure, like a brand new dedicated integration facility at the KIADB Aerospace Park. You have to have the capacity to deliver on an order book that big. Okay, so this brings us to the bull case. What could really push this company forward? It's that powerful combination of a freshly cleaned up balance sheet running straight into this huge pipeline of high-value domestic orders. Let's break down these four catalysts you see here. First, with those loss-making businesses gone, margins should expand pretty quickly. Second, they're adding a whole new revenue stream with a semiconductor business, targeting a $30 million run rate, which is a great play on the whole China Plus One global supply chain shift. Third, their own technology, their own IP, is getting noticed internationally. Just look at the LifeSeeker system getting picked up by the Florida State Guard. And finally, the market is starting to catch on, which you can see from that recent technical buy upgrade.
But let's be real, it's not a clear path to victory. There are significant hurdles. For a balanced view, we have to talk about the risks. The defense sector is notoriously tricky, and with the stock's high valuation, there's basically zero room for error.
And this slide lays out those risks pretty clearly. That restructuring could still create some short-term earnings headaches. The valuation is, well, it's steep. We're talking a PE ratio that's been bouncing between 70 and 90. That demands perfection. Then there's the cash flow issue. Defense contracts often have these back-ended payment schedules, which can really strain your working capital. And of course, you're not alone in the market. You've got intense competition from giants like BTS Electronics, or BEL, and a lot of other private players. So to put all this in perspective, let's just take a quick look back at the company's journey. This timeline really shows the momentum that's been building and that has led them to this major strategic shift. Right after the pandemic, from 21 to 23, it was all about getting the supply chain stable and starting that cleanup. By 2024, things started picking up steam with big contributions to national projects like the LCA Tejas fighter and the Chandrayaan-3 moon mission. Fast forward to mid-2025, you see record standalone EBITDA margins and new radar orders. It all leads up to March 2026 with that huge U.S. contract win for their LifeSeeker system, which really got the stock moving. So it all boils down to this one critical question. Centum has done the hard work of shedding its legacy weight, and now it's sitting on a potentially game-changing, high-margin order book. The strategy looks solid on paper, but can they execute? Can they actually deliver on these complex, long-term projects, navigate all those risks, and ultimately grow into what is, let's be honest, a very demanding valuation? That is the billion-dollar question everyone's waiting to see answered.